All right, let's get right into it. We're about to pull back the curtain on a financial system that's specifically designed to make you trade, not to make you profit. And then we'll walk through the simple, powerful strategy to beat it, the boring investor protocol. But first, I've got a question for you. That trading app on your phone, have you ever stopped to think if it's actually a financial tool? Or is it maybe something else? Something designed to feel a lot more like a slot machine? Because that's what we're digging into today. We're going to expose the hidden mechanics of modern trading apps, this whole system built to keep you constantly clicking. And way more importantly, we're going to lay out a super clear, simple protocol to sidestep that casino and actually, build real wealth. So welcome to what I like to call the trading casino. First up, we're going to look at exactly how these apps are engineered to totally blur the line between investing and just straight up gambling. Just think about it for a second. What happens when you make a trade on one of these apps? Do you see a big shower of digital confetti? Do the numbers flash bright green and angry red over and over? Do you get push notifications buzzing in your pocket all day? Look, these aren't features for serious financial analysis. They're dopamine triggers, pure and simple, lifted right out of the playbook for video games and casinos. They're designed to get you hooked on the action of trading. And this right here, this analogy just nails the difference. The app wants you to be a trader. It wants you betting on which elevator is going to hit the top floor first. It's fast, it's exciting, and let's be honest, it's a total gamble. Investing, on the other hand, is about owning the entire building. It's slower, yeah, and it's definitely less exciting, but it's how you actually own the asset that generates the value. So you have to ask, why do these apps push you to trade so often? Well, it's pretty simple. That's how they make their money. Let's talk about the hidden costs that come baked into free trading. You've probably heard this saying from the tech world, and wow, does it apply to finance. Whenever a service as powerful as a stockbroker is offered for free, you gotta ask yourself, what's the real product being sold here? And the answer is usually something called payment for order flow, or PFOF. It sounds complicated, but it's really not. Here's the deal. When you place an order to buy a stock, your free broker doesn't just send it to the stock exchange. Nope. They sell your order to these giant, high-speed trading firms. These firms get to see your trade a split second before anyone else, and they use that tiny edge to shave off a fraction of a penny for themselves. It's like a hidden toll that you pay on every single trade you make. Now, those tiny fees, they definitely add up. But honestly, they're nothing compared to the real wealth killer that comes from trading all the time. And that killer is taxes. See, the tax code gives you this massive incentive to just be patient. If you buy and sell something inside of 1 year, any profit you make is a short-term capital gain, and that gets taxed at the same high rate as your job. But if you just hold that same exact thing for more than a year, it becomes a long-term gain, and the tax rate on that is way, way lower. Just how high can that short-term rate go? For the highest earners, we're talking up to 37%. And that's before you even add in state taxes. So by trading in and out of stuff, you are literally choosing to put your profits in the highest possible tax bracket. I mean, the impact is just brutal. When almost 40 cents of every single dollar you make in profit can go straight to taxes, it becomes incredibly hard to get ahead. You're basically trying to win a race while dragging a parachute behind you. But it's not just the financial system that's working against you as a trader, it's your own brain. Our own psychology is just, well, it's not wired for this game. Psychologists talk about this thing called the action bias. It's this deep, deep-seated human need to do something when we feel uncertain or scared. When the markets are going crazy, just sitting on your hands feels completely wrong. We feel this overwhelming urge to act, even when the absolute best strategy is to do nothing at all. And this quote just says it all, right? Our action bias, which is fueled by fear and greed, it just pushes us to make the worst possible mistakes. When the market is crashing, our gut screams sell right at the bottom. When some stock is going to the moon, FOMO kicks in and screams buy right at the peak. And that trading app with its flashing lights and easy buttons makes it way too easy to listen to those terrible instincts. So if the game is rigged against you, both financially and psychologically, how in the world do you win? Simple. You stop playing their game. You choose a totally different path, one that's simple, incredibly effective, and yeah, maybe a little bit boring. This analogy just perfectly captures the two mindsets. The active trader is out there desperately trying to find that one magic needle in a giant haystack, the one stock that's going to change everything. It's almost impossible. The index investor, they don't play that game. They just buy the whole haystack. And that's exactly what an index fund is. It's a simple, super low-cost investment that automatically buys you a tiny piece of every single company in a big market index, like the S&P 500. So instantly, you own a little slice of Apple and Microsoft and Amazon and hundreds of other companies. You're not betting on one company anymore, you're betting on the long-term success of the entire economy. And when you look at the data, it's not even a contest. Over any meaningful stretch of time, this simple, boring strategy has consistently crushed the performance of most active traders. The real path to wealth isn't a crazy roller coaster. It's a steady, upward climb. You might hear the term average market returns and think, that sounds kind of mediocre. But you have to understand, in the world of investing, average is actually extraordinary. It means you are consistently beating the majority of professionals, people with PhDs and supercomputers trying to do the exact same thing. Okay, so how do you actually do this? How do you stop being the gambler at the table and start owning the whole house? Well, it all comes down to a really simple 3-step protocol. Let's walk through it. All right, step 1, delete the gambling apps. I'm serious. If your app celebrates your trades with confetti, get rid of it. Move your money to a boring, established brokerage that doesn't try to entertain you. Step 2, automate the buy. This is key. Set up a recurring transfer from your bank account that automatically invests your money into a low-cost index fund every single payday. This takes your emotions and your willpower completely out of the picture. And finally, step 3, make it hard to log in. Use a super long, complicated password and don't save it anywhere. You want to create friction. You want a barrier that stops you from acting on that panic impulse during the next market downturn. Because this is really the whole point. True, lasting wealth is not built by frantically checking your phone 100 times a day. It's not about finding the next hot stock tip. It's built by creating a sound, simple system, and then having the discipline to let that system do its work while you go out and live your life. So that brings us to the final question, and this one's for you. Are you going to keep playing in the casino where you know the odds are stacked against you? Or are you ready for the quiet confidence that comes from owning the entire house? The choice is yours.